I kept losing a lot of my trades today. I want to go over what I did right, what I did wrong, my analysis, my thought process, why I entered, why I exited, and the overall context backing the market. Now, one thing I want to say is before we get into the charts, I'm going to show you a higher time frame analysis, and this is going to bleed into the smaller time frame analysis. So what I want everybody to do is understand if you are looking to trend trade something, if you are looking to hold on for a larger move, or are you looking to scalp something and you're looking to capitalize on a short-term price movement. What I'm going to explain on a higher time frame chart also coincides and bleeds into a smaller time frame chart with the trades that I took today and how the analysis did not really align with what I was watching for. Before we get into it, I recommend everybody watching this to follow me on my Instagram at Ameritrade. This is my only account. The link will be in the description below. I post daily trading recaps along with really good trading tips and tricks that I guarantee you're not going to find anywhere else. The link will be in the description below. In fact, the levels that we are watching out for today, I've been talking about these not only on my Instagram story, but also every single day in the Discord community. So what I want to explain is on a higher time frame analysis. This is on the S&P 500. If you've been following my channel for a while, I chart the E-mini futures, and you could trade any S&P 500 related instrument off of this. SPY, SPX options. You could even trade the future contracts, micro E-minis, E-minis themselves. Does not matter. The S&P 500 future E-mini, the price action will be identical to any S&P 500 related instrument. So if you're an S&P 500 trader, which I recommend everybody to try out, it's the best instrument in my opinion to trade. But on the chart, what we're going to see here is on a higher time frame, we're going to see what I call the market being balanced. We essentially sold off about middle of December and we had a very, very large sell-off. This is on a 1-hour chart. You can see this on any higher time frame chart. After the sell-off, we've consolidated ever since December 16th to the day I'm recording this on January 5th. We've been stuck in this very, very tight range, which I'm going to highlight right here. And then I'm actually going to remove this box now that you're aware of it. This consolidation period is what I call the market being balanced. You have an equilibrium between buyers and sellers. As the market moves down, the dips get bought up. And as the market moves up, the rallies get sold into. We have an equilibrium of the supply and demand equation that buyers are equaling sellers. For the market to move out of this range on a higher time frame chart, we need to see new supply or new demand form caused by this consolidation period where we have either buyers or sellers initiating a move either up or down. So once we understand that this is an equilibrium of buyers and sellers, we're basically consolidating. This is going to give us an important piece of information, especially if we are short-term or even middle-term traders. So when the market's this balanced and we're seeing these choppy prices, it's normal, it's healthy, it's very, very good for the market because this usually means a larger move is to come. However, you must tweak how you trade to fit those conditions. And if you are a short-term or a middle-term trader, the best thing to do is fade the extreme, or you basically short the high and you buy the low. This has worked extremely well the past 15 days or so. Now, if we were to go on a smaller time frame charts, we're going to see supply that formed in this area. We're also going to see supply that formed because of this rejection over here. So there's tons of supply zones that have been forming at the highs that every single time the market rallies into these boxes, which should be pink for supply, we've failed. And it's safe to say fading the extremes where you sell the highs work very, very well. Now, the same thing for the downside. We had a demand zone in this area that the market bounced off of about a week later. Then this also formulated a new demand zone in this area right here that we've been consistently bouncing off of. With this in mind, if you are getting a move in the middle of this range, you are essentially skewing your risk to reward. It could work. I've taken plenty of setups this week that worked very, very well inside of this range, but you must tweak them and make it fit the conditions that we are seeing. If you are looking to capitalize on a larger move where you are not shorting the highs and buying the lows, where a move has not already happened, then your risk to reward gets skewed, and I recommend taking profits faster and looking to scalp the market capitalizing on a very fast little micro move. Now, to gain context, let's go over the pre-market plan. I post these every single day in the Discord community, setups I'm watching, levels I'm looking out for, and potential trading scenarios. The Discord is available only for Trade course members. So on the 4th of January, what we were watching was for this 3876 supply zone along with 3888. In fact, I said I cannot be bullish below these levels. See, because of what I explained earlier on the higher time frame analysis, everybody saw that the market was moving up one day. We failed from this 3880 level. Then the following day, the market starts moving up and everybody saw this gap up and they're saying, okay, let's get calls at the open. We're moving up, we're gapping up, whatever, at 1%. Let me take the market long. But if we look at the higher time frame analysis, we're coming up to that upper portion of this range where for me, it doesn't make sense to first look to take the market long. I first must look at sellers which are coming into the market. I want to find sellers for a sell-off back into 3840 level. If we fail below 3840, then we're going to see an increased sell-off into 3805. So this was essentially my plan in the morning. The market opened up and guess what happened? We rallied into 3876 and an immediate sell-off from this level. I took the market short on this second rejection, this double top, failed higher day breakout as we started moving lower. My stop loss was above the high and I took some profits off at 3840 and then took off the rest once we bounced off of 3840. Now zooming out on this chart, this 3840 level in fact was a good area to look to take the market long as this caused a very, very large bounce from it where guess where we moved into? Right into 3888 from the pre-market plan where I said I still cannot be bullish below this level and I want to look for sellers. So I see a lot of people looking to long this breakout to the upside where it just does not make any sense off this context. We sell off from this and it offered a nice setup end of day to take the market short, targeting this little area that we found buyers because of the bounce off of 3840. Now, a lot of people are going to ask, where did I find 3840? This was the day prior. Once the market came into this level, on January 3rd, I said warning was sent. This 3840 level becomes a very important reference point moving forward. As we started moving the day prior off of 3840, if you were watching the tape, time and sales, the level 2, we spotted very, very large buyers at this area. And in fact, this was the same point that we bounced off of the day following that, and it could have offered a nice long setup. Now today, January 5th, the day I'm recording this video, the pre-market plan was essentially the same levels. We had supply now at 3880 and 3888. I cannot be long inside of this range. I bolded that. I made that a clear point that I cannot be looking to take the market long on an upside move still below supply. I wanted to see a breakout above it for continuation. We never got that. And I said, in fact, I want to be bearish, looking for sellers to play the market short. If we find sellers at this supply zone, I want to play short, targeting 3840. Now guess what happened? Before the market even opened up, we hit the supply zone, we sold off, and we hit our 3840 target. Now what I saw with this is now looking back at this chart is remember what I said earlier in the video is that the market cannot stay in this range forever. And I'm sure by the time some of you are going to watch this video, maybe the following day or maybe next week, I'm sure we're going to be out of this range. No one knows when it's going to break, but the concepts remain the same. Essentially, what I thought, and I've stressed this all the time, thoughts are irrelevant in the market. You cannot say, I think something's going to happen, and the market's not going to listen to your thoughts. Thoughts are irrelevant. All you have is to create a plan, follow that plan, and manage your risk. I never say, I think this is going to happen, or I'm getting long because I think we're going to bounce there. That's the wrong approach. Market's not listening to you, and that's just a recipe to get ran over by the market. But essentially, what I saw here was the market tested this upper range, I want to say 4, 5, 6 times that I thought maybe, okay, this is the last time it's going to do this. If we hit the supply zone, we keep putting in lower highs from it. Every time we hit it, we fail. So there's going to be sellers which are factored in this range right here. That if these sellers bring the market lower and especially break below key support levels where buyers are factored in at, that's just going to fuel further selling. And then the market could continuously sell off from that level. So that was basically my analysis, especially rejecting the supply zone today and coming into 3840 which back on January 3rd was a very, very important reference area that we spotted some buyers on the tape that moving forward, 3840 was responsible for finding buyers. Now in the pre-market plan, we had the downside continuation plan was if we can break 3840, I want to play short targeting 3825. So that was my essentially 15-point scalp on January 5th, just simply playing these levels. The market opened up, we consolidated, we basically flagged out, and then we got that continuous sell-off below 3840. I took the market short, stop loss above this high. I was risking 4 points to make 15 points, almost a 4-to-1 risk to reward. This was a perfect 10 out of 10, A+, my best setup so far this week. And guess what we do? We hit 3825 perfectly, which is this green line, and the market bounces from this. So now we're below 3840. And now since we are below this area of buyers, I want to see this level act as resistance. Now 3840 was not a demand zone. This was strictly spotted by spotting buyers on the time and sales in level 2. This was not formed off of a chart. This was not formed off of a supply or demand zone. This is a very large participant in the market that I want to see this guy or this girl defend this position if we are above or below it. So my second trade this day came from when we bounced off of 3825 and I took full profits there. Then I saw 3840 act as resistance now for 2 other times this day, and I took a stab taking the market short just like my first setup. This is identical to the first setup. I'm taking a short right here. My stop loss is above the high. I'm risking about 5 points to make a potential 10 to about 35 points, depending on if my 3805 target hits. So excellent risk to reward here. This trade didn't work out. We got a random spike at 10:08 on news. I'm not too sure exactly what that was, but it was just a random spike on very strong at offer trades. And I got out of my position once we saw this little quick move up. I thought it was a good trade. It just did not work out. Not a big deal at all. Then we consolidated, and then we moved back below this 3840 level. Then in the intraday commentary tab, I update my thoughts in real time throughout the day of what I'm watching and why. I said excellent sell-off. As far as the setup right now, I want to be short below 3840. That was basically my line in the sand, saying, okay, we're below 3840. I want to remain bearish below this level. Now, at this point, we just needed to break below 3825, and there was not much support for a quick little 30, 35 point sell-off into our downside target. Then at 1040, this is when I said I'm back in short, 3834 with my stop loss above 3840. Essentially, the market looked like this. I entered short because I wanted this little support, 3830 to break. Stop loss back above the 3840 line. The trade did not work out, and then about 4 or 5 minutes later, I stopped out for my second loss. Then a few minutes later, guess what happened? As soon as I stopped out of this trade above 3840, the market rejected it again for the 4th or 5th time in a single day. In fact, the first hour of the market being open. So I took the market short again, stop loss above this high, same exact analysis. We're under this buyer, he's acting as resistance. I want to see the market sell off into our 3805 target. Eventually, we get a quick little 20 or 15 point sell off to the downside. And in hindsight, I should have taken profit down here, because if you listen to what I said earlier in this video about buying the lows and selling the highs on a higher time frame balanced period, if you look at the chart on the S&P 500 today, we were very, very balanced. So in hindsight, I should have taken profit at the lows instead of expecting a further sell off to the downside. This is why not only higher time frame analysis is very important, but also intraday context is extremely important as well, because I did not exit my trade here. The market again broke the lows. So if you see right here, we broke the day low, and if you break the low, you start seeing volume and volatility start increasing. At this point, I'm sending another update. I'm telling members you're going to get chopped up trading this action. Wait for volume to come in, wait for direction, wait for volatility. We aren't seeing that right now inside this range, which means it's coming soon, in my opinion. I said I was in short. The position is doing nothing. I'm just following my plan. Would you rather me sit here and say, oh, buy SPY puts, we just broke the low, let's expect a 100-point sell-off to the downside? Or would you rather make me, be honest, so nobody forces a setup and loses money like half the people do, is because they're trading in conditions that they should not be trading in. Some people do not know when not to trade, and I'm very confident that my analysis in the Discord will help and make people avoid taking losing trades or just trades in general that they should not be taking. So even though I said you're going to get chopped up in this action, we were in this setup and I was protecting anybody that was not in it. I'm still in short. It's not looking good. It's not looking bad. I'm following my plan. I'm hoping for a breakout. It's probably going to happen when nobody else looks. I thought this was a good setup. I still, reviewing this, think it's a really, really good setup that just did not work out. But we broke the lows and then we consolidated pretty much for 3 hours after that. Now, if you look at this chart, it looks identical. So keep an eye on this chart. It looks identical to this chart, no? And this is a 1 hour chart from the past month on the S&P 500. So this chart right here looks identical to that chart right there. And this tells us a lot because you want to match up context, higher time frame with lower time frame. Any move inside of this range is going to be very, very short-lived where you buy the lows and you sell the highs. If you did this and not look to do what I did today, where shorting moves down and not really looking to buy the moves or buy the dips, you would have capitalized on this little choppy consolidation range. Instead, I was expecting the market to break out of this range when it never did, and the market really didn't tell me that it was the best time to enter where sellers were outweighing the equilibrium of supply or demand. Then we consolidated. We got that very strong move up on Bullard speaking, and then I stopped out of this trade. It was a third loss. Each of my 3 trades that were losing ones today was the same analysis, the same thoughts, the same entries. The one winning trade was an excellent trade. It's just unfortunate that these trades did not work out. And I have a 3 trade rule where if I take 3 losing trades in a single day, back to back to back, I walk away. I know my emotions were flared. And to be honest with you, it was very, very frustrating watching the market from about 9:30 or 9:45 when I got out of this position, my first one. From 9:45 to about 1:45, we've done absolutely nothing but chop in a very tight range. And it's very frustrating. It depletes your mental capital because I was watching the market tick by tick, analysis by analysis, when in reality we moved in a 20, 30 point range in a 4 hour, 5 hour time period today when the market was open. In the overnight session before we opened, we moved in about a 30 point range in a 1 hour period. Whereas we moved in less than a range of that in the cash session and the market was open for 6.5 hours. So that goes to show you a lot with the auction and the participants. I took 3 losing trades today. It was a red day. Who cares? I don't look at trades as winning or losing ones. I look at it as, did I follow my plan or did I not follow my plan? And I get pissed off or I get angry if I did not follow my plan. But in these examples, I followed my plan and losses are inevitable. You cannot avoid them. If you take a losing trade and you put your head down, you punch your computer, you walk away, you are never going to be successful. What happened if I took those first 2 losing trades and then my third one when I entered, we got a 100-point sell-off and I just took my best trade ever? But if we put our head down and said, screw the market, I suck, and didn't take a trade, how would you have been able to capitalize if the market actually did move? So embrace losing trades. A loss is not a loss if you learn from something from it. It sucks losing. Nobody likes to do it. I'm pretty frustrated with the market today, my analysis, but it is what it is. And here's one thing that I'm going to leave you all off with. If you have an edge, you have a system that works out for you, losses do not matter. I go into the market every single day with confidence. Why? I know my system, I know my levels, and I know how I trade works out for me. And it's what I do to consistently make money. So you're going to have roadblocks. You're going to have days like this that you lose out on. You can't avoid them. But if you have something that works out for you and you have consistency, this is part of the game. And you should come back into the market with confidence because I know tomorrow I'm going to make it back. Or I know Monday I'm going to make it back when I hit a really quality setup like my first one today. That was an awesome trade. So I'm going to end the video on that note. I hope you all enjoyed it. Drop a like, comment if you have any questions, and definitely check out the links in the description below. I will be changing the structure of the Discord and the course very, very soon. As I add value, the prices of the program will increase as well. But I'm ending it. Peace out.